All right. Well, thank you for taking the time to meet with us today on this first webcast for our partners. We have been wanting to do this a long time, and now with the circumstances that we're under, we decided it's time to have this conversation with our partners on a regular basis, and we'll use the technology in place so that we can communicate with all of our partners regularly. I'm Jameson, and John is also on. John, do you want to say something?
Yeah, hi. I had the microphone just listening, so you didn't hear me cough in the background. Nice to see you guys. Thanks for coming out. I know how busy everybody is. I know that under the circumstances, this is not always the best use of everybody's time, but we certainly appreciate you guys being here because it's important for us to have you guys updated about what's going on, all the good stuff going on.
Thank you. And John and I are practicing social distance. We're in the same office. I can wave to him over there, but we're glad that we have this platform, and we're glad so many of you are here. And we have some great things going on, and we want to share those with you. So we're going to jump right in. So hopefully you can see the screen, and again, feel free to ask questions as we go through this. So just wanted to touch on a few of the initiatives that we're working on now at Neighborhood Ventures. The first one is this monthly partners only webcast. So many of you have investments with us across the 4 projects that we have. And we thought this would be a great way to update you on how your money is working on a monthly basis. So this is the first time that the first month that we're doing this, but we expect to do this every month, and we'll be able to report how the prior month went and the other things that we're doing. It's a great way for us to be able to communicate with you, because one thing we've learned is that we benefit a lot by having all the partners that we have across the state. So we want to hear from you just as much as we want to share with you what we're doing. One exciting thing that we've been working on the past few months is being able to pay monthly distributions to our investors. And the way that works is that we have a relationship with a company called Prime Trust. And Prime Trust is the company that we use to basically handles the financial side of the transactions. As investments come in, they sit in a Prime Trust account. And as we reach our goals on our target of how much we want to raise, then those funds are distributed and we're able to purchase the property and do the renovation. And one of the recent things that Prime Trust launched is what's called a custodial account. And Prime Trust is a bank. They're part of the American Bankers Association. The funds that are at Prime Trust are insured. And you're able to, as an investor, create an account that is a custodial account. It's linked to your Neighborhood Ventures account. And so as we pay distributions to you as investors, those distributions can be held in this custodial account, and then you can use them for future investments, or you can disperse them to your own personal account. But by doing this, we're able to kind of streamline our financials and the transactions that are going back and forth with all the disbursements, as we have over 100 investors in most of our projects. So there's a lot of disbursements that go out. The great thing about this is it's similar to if you were to have a Fidelity account and you're trading stocks or ETFs. If you were to trade one of those, you can keep cash in a cash account at Fidelity, and then later, as you decide to invest, you can pull cash out of that. And that's similar to how this will work as well. One way that John brought up the analogy, it's kind of like eBay using PayPal. PayPal is the financial side of eBay, and allows the facilitation of a financial transaction. And then you can keep funds in that eBay account or in the PayPal account. And that's similar to how this Prime Trust account will work. So we are going to be reaching out to our Venture on Wilson investors first to help you set up the accounts. And if you, for the investors who are able to do that, then we will pay the distributions on a monthly basis. So we're excited about this, and we think it will be a great thing for all of our investors, and a great thing, especially to be able to get those distributions and a check every month from your investment with us. I'll turn it over to John.
Well, a lot of interesting things going on in the market. So Jameson and I decided to break this up into two categories, and I'll call them, the first one is what we know is actually going on. And I'm going to talk about some of the things in Arizona specifically, because that's where we have our investments, and it's also where I have the best research. To begin with, everybody was worried about rent collections for April and then May. The reality is on our properties and across most of the properties that we've been surveying in Arizona, rents have come in stronger than expected. So that's a good thing. It's a function of employers having the PPP loans available. It's a function of some of the stimulus money is probably coming in, but it's also a function of confidence in the market. They're spending money on rent, and certainly don't want to lose their home. They want to, or wherever they're living, apartment, home, condo. That's been a new phenomenon we're dealing with, but much stronger rent collections, which is a good thing. All accounts so far through May is that they've been stronger than we expected, so that's good. Another unusual thing, or something I didn't expect, but it's happening. It was the thesis I had was that we'd see better single-family home sales based on people migrating to Phoenix, or at least what's the word I use here? The acceleration of people's migration to Phoenix, and that's certainly happening also. We're hearing that large homes in North Scottsdale, even smaller homes around town, people are moving here more and more, and those homes are selling pretty quickly. That's kind of the canary in the coal mine for us. I think what's going to happen from that is we'll see people buy homes, move here. They're getting frustrated with some of the shutdown issues in some states. I heard from a friend of mine this morning that Chicago's considering not opening public schools in the fall. And his answer was, if they're not doing that, I can't put up with kids again in the house for another 6 months. We're moving back to Phoenix if that happens. So we're seeing a stronger single family market than we expected. And I think that's going to lead to more good news about multifamily. Other part about that is with the apartment buildings filling up, staying full, rents staying strong, we're seeing that values are staying strong. You'd expect, or we definitely had a lot of people contact ABI Multifamily, my other company, concerned that we'd see failures in the market, or at least discounted pricing. It's not happening. Buildings are full, people are doing fine. Occasionally people are working with residents, but all in all, values are not going down, they're staying stable. And if you've heard me talk about this before in some of the other videos, I firmly believe that hard assets are going to go up in value. With this much liquidity flooding into the market being put in the business, into circulation by the governments, all governments, we're starting to see inflation creep into the market, and the value of assets are going to go up. That combined with the fact that interest rates have gone down. So during this whole pandemic, we've seen the indexes drop. The 10-year treasury, cost of federal funds, all those things that are used as a benchmark to set the interest rates for commercial loans have all gone down. I expect that to continue. So that's actually independent of everything else. Any of those factors would have increased the value of properties in Arizona. Multifamily is the darling of the business, and I'm glad we're in Arizona. So the other part of this is what we suspect is going to happen next. The acceleration into the Phoenix market is going to continue. I think we're going to see more and more of that coming out of California, Denver, Colorado market, and probably Texas market. The Texas and Denver markets or Colorado markets are going to be affected probably more by oil pricing and the decline of the oil markets. California is certainly affected by both legislation and regulation, and just people are starting to get concerned about some of the geopolitical and economic decisions being made by some of their state and local governments. Whether you believe them or not, or support them, people are voting with their move. I think that's one thing we can expect that happen. I think that's we're going to start seeing more of that over the next few months. Arizona is going to be positioned to do well. We have a very strong, business-friendly local and state and county government, and our powers that be, our governor seems to be making some great decisions out there that are helping us. So very business-friendly, very open business-friendly. And the other thing I'll point out, if you guys don't know this fact, I think they said there's 1,200 people per square mile in Arizona on average. 1,200. New York City, 85,000 per square mile. If you want to be somewhat distant and you want to be in a climate that's hot and dry and not so conducive to the next pandemic or continuation of this one, Arizona's on the high on the list. And then Arizona was also named, or Scottsdale, Arizona was named the best city to quarantine in. As if that was a topic we had before, but I suspect we're going to see more and more pro-economic news coming out of Arizona based on decisions made by regional and local governments.
So thank you for asking some questions. I've seen those come across, and we will get to those as we get through the presentation. And so feel free to keep asking those questions, and we'll get to them. One other announcement: we're kind of in an effort to simplify things for investors and let you know exactly how your money is being used. I wanted to share with you what we call our project life cycle. So this is the process we go through with each of our projects, beginning with acquisition, then doing the renovation or the value add. After the renovation's done, the stabilization phase, that's when we re-rent and release the project. And then finally, once it's stabilized, it's generating cash flow, and that's when we're paying distributions to all of our partners. And once cash flow is coming in and it's consistent, then we're moving the property to sell it. And each of the projects are in different stages on this cycle, and we'll go through that through the cycle on each of the projects. We're also going to share with you our timeline so that you can see where we're at in our progress. Each project has a timeline, either 2 years or 3 years. And by keeping it simple this way, we'll be able to share with you on a monthly basis where the projects are at in the process. So we're going to start with Venture on Wilson. And one of the questions that came across from Scott was, what is the percentage of our delinquency in rents for May and April? And we are happy to share that at Venture on Wilson, in both April and May, we've collected 100% of rent. There is no delinquencies. We expected there would be some, and thankfully, the project's in a really high demand area. The folks that are living there are more professional in nature, and in our process, and John can touch on this a little bit too, but we reach out to each of the residents. If they are going to have any challenges paying rent, we let them know that they need to give us some supporting documentation around job losses related to COVID-19. And we had no residents that had any issues paying rent, both in April and in May. And today we're going to be talking more about April since the full month is complete, but we can also share that May rents all came through in May. In addition, on Venture on Wilson, we have 3.5 months of interest reserves. We like to share with you so that we have a good amount of reserves in the property. We're collecting 100% rent, it's 100% occupied, and we have good reserves. We want to have 2 to 3 months reserves at a minimum, and we have over that on this project. Because the property's done so well, rents have gone up, we are increasing the distribution beginning this month to 6% a year. Prior to that, it was at 4% a year. And so we're excited that now the property is doing so well, we're taking it up to 6% a year. And that will begin this month. The distribution for April, we expect to be able to pay at the end of May for those of you who will create the custodial account. If you don't end up creating a custodial account, that's fine. We'll continue to pay the distributions on a quarterly basis. I'll pass it over to you, John, for the other property updates.
Sure. So again, the good news, rents are doing well, tenants are stable, neighborhood's getting better. One of the things we chose not to do, just so you understand the rent collections, we're renewing leases there, but we're not increasing rents at the moment. I think it's both from political position, PC position, and from a common sense position. We made the decision not to increase rents on the rents that are turning over now in the next few months, concentrating occupancy. So 100% rent collection in May, which is a good thing. 100% occupancy, and there's a number of other good things that are going on in the Tempe market. Construction hasn't slowed down. Not only did the Whole Foods open up, and that's done well, and it's becoming a huge part of downtown Tempe, because downtown Tempe was a food desert for years when some of the other grocers had closed or moved outside of downtown Tempe. So that's huge. We also heard rumor this week that there's a Trader Joe's opening on Mill Avenue and Rural Road. Mill and Rural and University, right?
Yeah, Rural and University. Yep.
Rural and University. I'm not sure what corner that's on, but if I had to guess, it's probably the northeast corner. Maybe the Trader Joe's is going there. So that's a good thing for the neighborhood also. And then there's more development right across from our Neighborhood Ventures project. An owner is building a small for rent project. I think it's going to be between 4 and 10 units. I haven't seen the final documents on it, but we get some notices on the zoning hearings on that, and that's on the vacant lots right across from us. The other thing is we're seeing the piece of land that was used for staging for the Whole Foods building and the apartments above it. There's a piece of land right there, a small strip of land right on the railroad tracks on University Drive is now a 5 or 7 story building that's already vertical. So a lot of development continues to go on in that neighborhood, and despite the fact that ASU has been out of session for physical classes, downtown Tempe is still done well, and I expect that for a while.
And just to reiterate, Venture on Wilson, we're just coming up to year 2. We purchased the property in June of 2018. And so now that the property is stabilized, it's generating strong cash flow, we expect to sell the property in the next year. And the market there, as John alluded to, is very strong. And we're excited to take that step and have our first project kind of go full cycle here. Going to Venture on 66. So this project has been renovated, is now in the stabilization stage. We bought the property just under a year ago. For those of you who visited it, it turned out beautifully. We had a really strong first quarter. This is being ran as a short-term rental. And as all of us know, the short-term rental business, the travel business in general has been hit really hard with the shutdown. But thankfully, we knew that was coming, and we still had a very strong occupancy in April, 51% occupancy. We did that a few ways, but the benchmark for us is 45% occupancy. So our goal is to be somewhere in that 50% range, with 45% being the kind of the baseline, and we achieved greater than that. The property generated nearly $6,700 in revenue. Just to compare, before we bought this project, all the rent that it was generating each month was $5,500 a month. So in a really tough month, April, where we had a big impact from COVID, we still generated $6,700 a month. Just to put into context, in the first quarter, this property was generating nearly $15,000 a month in revenue. But because of the travel restrictions, that had a big impact on revenue. This property has 12 months interest reserves. So as we prepare for the summer months, which we in Arizona know are lighter when it comes to travel, we're well positioned to do well with the property, to continue to keep the occupancy rate high, and then in the other 9 months of the year, execute and have the property do well. I'll turn over to John for some of the updates and some of the ways we've been able to keep that revenue high.
Yeah. Jameson said we saw this coming. We didn't see the pandemic coming. Once we saw that the bookings were dropping off, we quickly pivoted, which is, again, I'm going to tell you, I'd rather be fast and nimble and gritty than smart sometimes, because we pivoted very quickly and looked at other options, such as the option of longer term short furnished rentals, and also reaching to different groups we thought would be our better short-term rentals. And we did great with that. We actually found groups of first responders who had to be in Phoenix, whether it was hospitals or other first responders that needed to be in town, that we reached out to, and it's helped us maintain occupancy when most Airbnb, short-term rental, hotels, resorts are suffering. So we got lucky on that. The neighborhood's only gotten better, and I'll explain this to tell you that in the last 90 days, probably maybe even less than 60 days now, ABI Multifamily has sold 3 buildings in the neighborhood, and they're all gut renovations that the buyers are going to do to them. In addition to, there's a building down the street that's being built ground up on our street at the corner of the cul-de-sac south of our building by a few lots, and a number of other buildings that were under current ownership that didn't recently sell are being renovated right now also. We got into the right neighborhood. We got there at the right pricing. We did the right renovations, and the property looks really well for it. So that's all been fantastic. I don't expect any of that to slow down that neighborhood. Again, Scottsdale, best city to quarantine in.
One question that came in, I think, is a good question from Scott on Venture on Wilson. His question was about how did it perform relative to the pro forma. So when we bought the building, the property was generating $771 a month per unit. There's 10 one-unit building, 1 unit, 1-bedroom units, and 2 2-bedroom units. Now the property, and we expected that it would generate $950 after the renovation. Our average now is for the 1-bedroom is $1,050, and for the 2-bedroom is $1,250. So we're actually about 20% above what our pro forma was, and we've been helped by the market. So we are well above what we expected when we bought that 2 years ago. So moving to Venture on Marlette, the renovation is nearly complete. John will touch on that in a minute. We're about halfway to our 3-year term on this property. And for those of you who are investors on this, you've probably seen the recent renovation updates that we've been sending out, and it's coming together beautifully. So a few things that are happening that are key from a financial standpoint is we expect to begin pre-leasing in the next few weeks. And we now expect on our pro forma $1,600 per unit. That's up from $1,300 when we initially purchased the property. And this has been driven by the rents in the neighborhood. We knew the rents were going to go up, and we like to have a conservative goal. And now as we actually go to lease it, it's much higher than we were expecting, which is obviously that's a great thing for all of us. We will see those numbers come through as we start pre-leasing, but we're now expecting $1,600 per unit. I'll turn it over to John.
So, a couple things about this project. It's been a lot of fun. We've had a couple surprises, but we're back on track. one of the things that is giving me a much needed boost in the arm on this project is it kind of knocked our legs out from under us. It took a lot more effort than we thought. Our property management company walked the building with us a few weeks ago, and they haven't seen it. They've been kind of dormant in what they've had to do with the property other than paying the water bill. And I think that's about it, actually. That's all they had to do. But they came out, saw the units in their partially finished cabinets, some countertops in, some flooring, things, and they were blown away. And just hearing their comments about walking through the property and seeing how nice they came out was really invigorating. Again, put things in perspective, it looks better than we expected. Our designer, Rocky, did a fantastic job on picking materials. Everything's come together really nice inside. We're at the point now where we are doing our finishing touches. We're putting fixtures in, light fixtures. All the plumbing fixtures are in. There's a few more cabinets and a couple units that are being put into the units. Bathrooms, showers, all new tile. Everything's gorgeous in this place. It's really coming together well, and we're doing some light landscape right now. We call hardscape, fencing, paver stones, things like that to finish off some of the landscaping before we start adding some of the plants. And it's going to be another couple of weeks of finishing off the little things and make sure everything works well, but come out really, really well. And that neighborhood is doing exceptionally well because of the new building across the street and other buildings around it that have all leased up and continue to lease up. I think, and I know we already have a waiting list for units to rent. Some people that asked us weeks or months ago, other people that have recently been showing up or heard that we're getting closer to be finished are showing up and looking at it. But it looks good. You guys will be very impressed with how that's coming out so far, and we can't wait to show you more of a finished unit. I think we have appliances coming in tomorrow to the first 2 units, and that includes full-size stack washer dryers, and that's going to be that. And we've already got carpet in a bunch of the units too in the bedrooms.
Hey, John, so we had a couple good questions that we can touch on. So I'll answer one and I'll pass one over to you from Tammy. Hey, Tammy. So first question is, with the monthly distributions, how does that work with IRAs? If it's a custodial IRA, the distributions just go to them, and we'll continue to do that on a quarterly basis. If you have an LLC IRA, where it's checkbook control, then we'll send the distributions to your account. So there's a little bit of a difference there if it's done with the IRA company or if you have the checkbook control. Another good question from Maureen is about the location of the projects, including the location. So let's just touch on Wilson is in Tempe, Mill Avenue and University. Venture on 66 is in Old Town Scottsdale. About 5-minute drive from Old Town Scottsdale, 66th Street and Osborne, and then Venture on Marlette is 7th Street and just north of Bethany.
Yeah, Bethany is probably the best cross street.
Other question for you to adjust, John. You'd be better for this. Tammy asked about for long-term rentals. Are you considering equipping spaces with mini office facilities? I think work from home is going to be a big topic for some time to come. What do you think about that, John?
Well, I think that's a natural progression, and people will decide how to furnish the places. These are, except for one unit, 13 of the units are large 2-bedroom, 2-bath units. People can use that second bedroom, and the living areas are fairly large, but they're very light and bright, taller ceilings, great windows. I can imagine people can work in them, but we're not doing anything other than providing brand new wiring and internet access cables to the units. Individual tenants can figure out how they want to work there, but I don't know what else we could do other than that. That's the best way to make it more palatable for someone to be around.
Yeah, and I think it's kind of an interesting topic that we'll have to monitor. I will say John is on the cutting edge of real estate, how things change. And I think that's something we look at. There's a lot of kind of mixed use projects that have gone up in the valley. Some have been more successful than others. And I know you're talking more of like a work from home setup, but interesting idea. So last project, most current one, this is Venture at Villa Hermosa, and this is also in Uptown Phoenix. Uptown Phoenix is where our office is. It's where these two projects both are. We love this area right now. A lot of growth is happening, and it's a highly desirable, becoming a highly desirable area to live. And we have acquired this property. We now own it. We are beginning the renovation stage. This is a 2-year project, so we're just starting. A couple notes: we're now 86% funded on this. As you can imagine, with COVID-19, what ends up happening is most of us just kind of wait and see how things happen, and see what's going to happen and the timing. And that's did happen with Villa Hermosa. As we purchased the property, we didn't reach 100% of our fundraising target, and then COVID-19 happened. And that's okay. We're set up to be able to continue to move forward with our plan as we continue to fundraise. I will say, in the last week, and even the last 48 hours, as the governor has announced things are opening, we've had an influx of new investor inquiries. We've had a bunch of new investments over the last 3 days. So it's good to see that economic activity is kind of coming back. And we have no doubt we'll be able to reach our 100% goal. If some of you who are here haven't invested in this project, a little bit of an update. We originally had planned to run this as a short-term rental, but we also planned and underwrote the project as a long-term rental. And it was financially, either scenario would work for us. With what's happened in the neighborhood, the rents have continued to move up, even in the few months since we bought it. And there's been some new apartment projects that have come out on the market that have increased the market rent. So we now expect that the property could generate $14.50 a unit after the renovation, where we used to expect $12.50 a unit. So we will go through the renovation process, and then we may end up operating this property as a regular long-term rental, and it will do great in that scenario as well. And I'll turn it over to John.
Yeah. Again, another great project. I'm happy with it. Remember, part of the process with these buildings is we have to get into the units to do renovations. So we're human, and we're being very conscious of the fact that we have tenants in there that might not have other housing choices. So we've been working with them and not pushing the move outs in this climate right now with what's been going on. We have had a couple units turn over, so we've had the ability to go into those units, do demo of the units, which is light demo, cabinets, flooring, some doors, of course, the old appliances, things like that. And as we've done that, we've then started doing some of the renovations, baseline renovations, like upgrading the electrical for each unit, including adding direct circuits for microwaves and dishwasher, and disposals and other things. And that was important to do there. So we've done that, and I expect it's going to keep going. And as Jameson said, we own the property, but now we had a plan to either do the short-term rental, which was very profitable, or the market rate rental. The market rate rental is catching up to that, to the A plan. And to put in perspective, we even if this market comes back, or when this market comes back for short-term rentals, we're going to have all the units renovated anyway, and we can quickly furnish them and fit them with fixtures and be able to do some short-term or do short-term. But we're doing well with that. We expect to be able to fully renovate all the units by end of summer. That's our game plan. So if you were to drive by the property, you'll see there's a few units that are vacant that we're going through, and then we're going to start going through unit by unit. And we have tenants. We've been able to help some of the tenants that have relocated. We have not asked any tenants to leave yet. They've been leaving on their own accord, probably based on the fact that they know there's new ownership, and that building was owned by the same owner we bought it from that owned it for 30 years. But that's working out well. And part of the renovation is going to be the exterior renovations too. I just put that out there. We're going to do some of the exterior stuff first on this, because of the way we're doing the work, we can get away with doing the exterior first and not trample it like we would on some of the other projects.
I would encourage anybody, if you haven't seen this property, or if you haven't invested in it, to take a look at it. If you drive by it and you see how unique it is, you'll see why we fell in love with it. We have 112 investors, so this is our biggest amount of that we have raised so far, the 4 projects, and we already have 112 investors. And I think that this project will probably get fully funded here in the next 6 weeks or so. Hey, one other question that came across that was a good question: will we be holding a open house for Marlette like we have our other projects? I expect we will be able to hold some type of open house in June, whether that's staggered times, or I don't think it will have to be all virtual, but we'll give some guidelines out, because we'd love to have you come out and see what that project's looking like and how it came out. It's turned out really to be a pretty property, and we'd like to kind of showcase it to all of you. Other questions? So Ajay, what is your plan if you don't get 100% funded on this? So the project is 100% funded by us. So we've already closed on the property. We own the property, and it's moving forward. Basically, what happens is as we continue to raise money, that's less that we have to put in at the end. So we have the funds to complete the project. How many of the units in Villa Hermosa are still left to renovate? There are 14 units, right? That's from Maureen. So we haven't begun renovations on any of them. We've just started the demo on a few of them, and the electrical on a few of them. So this will be a 6-month renovation process from the time that we purchase the property. And by the end of the summer, not the end of the summer, but by midsummer, we expect to be fully in renovation mode. And then as we get closer to the end of the year, November timeframe, property would be completely renovated. So as of now, we're just starting that process. If you have any other questions, feel free to mark them in the chat. You can also unmute if you want to ask it verbally. Again, thanks for taking the time. We're excited about all the support that we've had from all of you, and as you know, John has a really good pulse of the market, and we're looking for our next project. So, John, you maybe want to touch on a little bit about that and what we're thinking about for the next project.
Well, we've been really lucky with what we bought so far, and we're probably going to be looking in this next few months for our next project. Could be Tempe, could be Uptown Phoenix, could be Downtown Phoenix. But the one thing I think people were hoping for, which is not going to happen in Arizona, like I started off saying before, we're not going to see widespread failures of the multifamily market. So we're not going to see large properties fail or buildings go back to banks, which is a good thing. I can't say that for every state and every market throughout the country. There's going to be some markets that are going to hurt. But we know this market best, and we're going to look for deals here, and we evaluate the deals based on what we can do to them and what we think the value is going forward. This is going to be an interesting next 3 months to figure out how to make that work. We also have a great lending relationship with all of our lenders. It's very important for us also. At a time when some lenders are cutting back their requirements on loans, changing the requirements, adding requirements for more reserve money or higher debt coverage ratios. Our lenders have been aggressive and telling us that they're moving forward, and they love what we're doing, so they support us. In fact, I'll tell you that our lender on Marlette, another point there, walked the property and was just gushing about how well it's turned out and how much they like it. So That happens. The last little bit of a property always shows best. So I don't know where our next project is going to be, but I can tell you it's probably going to be less than 20 units. It's probably going to be another value add deal that we find, and it's probably going to. And if we can find something off market, where we're not competing against the open market, that's what I'm looking for. But I am generally concerned that we are going to have a lot of in-migration, and that includes investors into Phoenix that are looking for properties. And hopefully we find the right projects before they all find them.
We'll just do
Tucson projects.
one more time.
This is Eleonora. Are you looking for projects in Tucson as well, or just Phoenix?
Good question.
I like Tucson, and I possibly the two constraints we have with Tucson. One is logistics. We have our own in-house teams that are working on things, so it makes it a little more difficult. The second thing is generally Tucson doesn't have the same appreciation and value. They've got strong rents, higher cap rates, but it's harder to buy a building and do the renovations to them and see a much bigger bump or pop in the valuation, at least traditionally. So it's harder for us to buy something in Tucson and have the same kind of returns we're getting in Phoenix right now.
Another good question, that if we're considering a hybrid model for Villa Hermosa, which meaning some short-term rentals, some long-term rentals, I'm not a fan of that personally. And I think it's because when we go to sell the property, most people either want it to be a long-term rental or they want it to be a short-term rental, one or the other. So you're managing one thing. They're managing those types of properties are very different. So I think as we near the renovation completion, we'll make a decision. Okay, is this going to be a short-term rental or a long-term rental? The good thing is we could do either, and most people don't have that ability. Most projects are either kind of most of them are more apartment buildings. With Villa Hermosa, it could be ran as a short-term rental because of how it's set up. I think that should be our last question. We've got a bunch that came through, a lot of participation. This has been great. And I guess my parting comment is I look forward to doing this every month. We'd love to hear from you. We get most of our new investors from our current investors. So we love the fact that you're telling your friends and family about what we're doing. And we look forward to continuing the interaction. All right. Thank you.